Should you buy Chargepoint stock before earnings? Okay, guys, so here we are with the moment of truth when it comes to Chargepoint stock. So I just recently posted a video on Chargepoint. You guys gave me a lot of flack as we had a huge sell-off here where Chargepoint actually almost dipped below $20. So I was racing to the market on Friday to buy as many shares as possible, but I had some money tied up in some other positions like AMC and MicroStrategy and stuff like that. So I didn't have as much buying power as I wish I had, but I ended up picking up some shares cheap because I know earnings is coming up, and I think investors around are going to be very impressed with the results. Before we get into this video, guys, be sure to check out Webull and grab your 2 free stocks. All you have to do is open a Webull brokerage account and deposit at least $100 to receive your 2 free stocks, guys. So you can click the link in the description below or head to investortrip.com/Webull to grab your free stocks. So let's head into the interesting news, guys. So, obviously, one of the things I realized about Chargepoint is that at the time, the RSI for Chargepoint was extremely high, but I really wasn't willing to part with my shares because I really didn't want to miss this one. So I felt like Chargepoint is in a similar position that Tesla was in many like 8-10 years ago. So obviously people that bought Tesla at like $44, many years ago would have made a nice profit, but now those shares are worth substantially more, around $3,000 split adjusted price. So, selling a stock from like $20 to $44 and then seeing it go to $3,000 many years later, it just seems kind of silly, right? So that's what I was kind of thinking with that. I just wanted to basically buy as many shares as I can of Chargepoint and hold on to them because I think it's going to be worth a lot more in the future. So we got some interesting news coming up. Chargepoint is going to report earnings on March 11th, guys. So Thursday will be a really interesting day to see what's going on. So I saw this interesting article on Investor Place. It says for Chargepoint stock, earnings are suddenly crucial. So basically it's been talking about how the stock has fallen like 40% over the last month, but it still talks about the EVs become a $5 trillion market globally. And I think that's, too low. I think it's definitely going to become a much bigger market because it's going to be like this flywheel effect. So once people realize how much better the EV is, how it's better for the environment, it's cheaper to maintain, and they last a lot longer, and they maintain their resale value much better, I think it's going to be an explosion. So $5 trillion seems like a low estimate. So basically what's going to be going on here? Well, as you can see, Chargepoint expected about 135 million in 2021 revenue, and they expect that to go to more to 2 billion in the fiscal year 2027. So that's really with a compounded annual growth rate of around 60%, which is exactly what Tesla is doing. So assuming the stock does that, it's going to run a lot higher, and they're projecting just under 200 million in revenue in fiscal year 2022 with gross margins of 31%. So what are we really expecting out of earnings here? Well, I think 2 things are going to happen. So number one, if you guys watch my previous video where I talked about the Senate passing the stimulus bill, a lot of new money is going to come onto the market, guys. So a lot of people, that haven't maybe had money to invest lately, or they're looking to make some moves in the market, I think that there's going to be a lot of new money that's going to come into the market. So we're going to see a lot of these EV stocks that have been completely sold off. I think some of them are they're very intriguing values long term. I mean, the EV industry is just like to me, it's kind of like what happened with the smartphone. At first only a few people had smartphones and they were very expensive, and then now everyone has a smartphone. So that transition, it took 10 to 15 years, and that's exactly kind of the timeline that I would see for EVs. By 2035, if you don't have an EV, people are going to be like, are you kidding me? I mean, a lot of countries are going to even ban gas guzzling ICE, so you really won't have a choice. You won't even be able to really buy one. And even companies like GM and Ford and all these companies, they won't even be selling internal combustible engine vehicles by 2035. So basically EVs are the future. So that's why I like Chargepoint so much. I know a lot of you guys are saying, oh, you're down or something like that, but I would say with this stock, like, I think it's so important to have a long-term perspective on ChargePoint. Now, I'm not talking about some of these other EV companies because a lot of these companies won't survive. So, a lot of EV companies are projecting these ridiculous, robust sales, but at the end of the day, not all of them are going to survive. But ChargePoint, there's a couple of things that are extremely different with ChargePoint, and that's what I want to make with the second point. It's the leader in the United States. So, I keep talking about this, but, one of the things I've learned about investing is that you don't want to overthink it, right? So you obviously want to invest in what you know, but you also want to invest in what's obvious. When Apple came out with the iPod, they came out with the iPhone. It was just obvious that this company was the future. They were the largest, biggest player, and they were innovators. They were the first to really show us that, you could basically turn your phone into a mini computer, and then just everything took off. So ChargePoint was founded in 2007, guys, and they basically are the market leader in the United States when it comes to charging. If you guys, if you guys live near any metro city in the United States, I'm not exactly sure where all of you guys live, but if you guys live in, in any metro city in the United States, you go to your Google Maps right now, you search for like EV charging station near me, you're going to see ChargePoint everywhere. So they're already well positioned. It's just that a lot of people don't understand that we're moving towards EVs. So all of these people that are going to end up buying EVs in the future, they're going to be using ChargePoint stations. ChargePoint is like taking that market share from Exxon and BP and all these other gas stations that didn't really see where the future is. And even though we're still going to be using oil in the future, we're not going to be as oil dependent. And this company is trading at like 20 right now the stock's at like $26. Usually you don't see great stocks trading at $20. I mean, it's just rare. Most great stocks for great companies are at least $100. So that's what I'm saying. Like long term, I think ChargePoint is definitely $3,000. And I wanted to kind of talk a little bit about that and why I think it's so important to just not necessarily like you have to buy before earnings, but get into this stock, I think, because this is going to be a game changer. And if ChargePoint executes on, installing 2.5 million charging points by 2025, increasing that revenue, I mean, this can be a $3,000 stock with it by 2030. So why is it going to be a $3,000 stock, and why I think you should buy before earnings? Well, I think the market's going to catch on to the growth in ChargePoint, and we could see much higher prices. I mean, the stock, before the SPAC merger was trading at around $45, and that was without any earnings behind it. So this will be the first quarter that ChargePoint is basically reporting earnings as a publicly traded company. So let's talk about that $3,000 price target. Okay, so where did I get the price target from? Well, you guys can check out some of my previous videos, but I just want to give you a quick gist of what I was thinking. So in the past, I basically used the compounded annual growth rate of 60%. If ChargePoint continues to grow its revenue and grow its business at around 60% annually, that is roughly going to generate similar returns for investors because, over the long run, businesses and stock prices do trade pretty closely. So, let's look at the market cap right now. The market cap is $7 billion. So you're telling me the largest EV charging network in the United States is $7 billion. There is not a single company in America that leads the market and trades for such a low market cap. So where did I get the $3,000 price target? Well, let's say the stock is trading at around $30, which I think it will in the near future, especially after earnings. I expect earnings to be pretty good because most of these EV companies like Tesla and NIO and things like that, they all did record revenue, record deliveries in Q4 2020. So if they've been delivering EVs at a record pace, why wouldn't charging networks do well as well? Obviously, people are buying these cars. They have to charge them. So let's say that ChargePoint is sitting at around like, if at $30 stock price, quick math on top of my head, it's like $8 to $9 billion. Is it possible that ChargePoint trades at a market cap of 800 to 900 billion by 2030? Absolutely. I mean, it's going to be the largest. It's already the largest network. They're planning to grow to 2.5 million charging points by 2025. What will the number be in 2030? I don't know. 5, 6, 7 million charging points, 10 million. I'm not sure, but I know that if Tesla was already looked like it was on pace to become a $1 trillion company in 2021, wouldn't the largest EV charging network become $1 trillion company in 10 years. So that's kind of my rationale, guys. So that's a quick of it. Be sure to check out some of my previous videos where I really go in depth, but I wanted to kind of keep this video, a little bit shorter. But that's basically what I'm doing, guys. So that's how I'm thinking. And yes, I bought this stock. Literally, when I first heard about the SPAC merger, I've been buying shares and I've just continually been adding to my position. So I think it would make sense to buy before earnings. I think we're going to see a nice earnings pop. And also, once again, that stimulus money is going to be coming onto the market. So if ChargePoint has a really nice earnings report on Thursday, March 11th, you can bet a lot of smart money is going to take notice. And that could send the stock price a lot higher, guys. So that's to wrap things up, guys. I think ChargePoint, excellent buy before earnings. Of course, it could go down. I'm not really sure. Like I said, I'm not a certified financial advisor. I'm not giving you guys investment advice. This is just my own, what I'm doing personally when it comes to this stock. That dip buying opportunity was an excellent opportunity. So congrats for you guys that picked up some shares there. I picked up some as well, but just be really interesting to see, guys. I'm long-term very bullish on EVs in general, and I'm more than happy to wait patiently as this company turns into probably one of the best investments, I think, of this decade. I really like what they're doing, and I like how they're fighting climate change, guys. So that's one of the reasons I like it so much. So that's it. Until next time, guys. I hope you enjoyed this video. Please smash the thumbs up button if you enjoy my content, and smash the red subscribe button. Really helps me out. Be sure to check out my daily Stock Watch newsletter. You guys can check that out on Monday. I'll be sending out an email on Thursday morning before ChargePoint reports earnings to give you guys exactly what I'm doing with the stock. And you guys check out my private Discord chat as well. So that's it. Until next time, guys. Take care.